Hello, everybody, and welcome to the live show. We're going to be taking a look at the Bitcoin charts, at the Ethereum charts, at the Chainlink charts, and the Tezos charts, and suggested altcoins in today's show. Thank you so much for joining me. Be sure to hit that like button, and of course, if you're new here, welcome to the family. Thanks for joining us, and subscribe. Yeah, cool. So today's episode, what's it all about? Well, of course, what a difference a high makes. We're looking at the Bitcoin chart and seeing that it had a high recently, and of course that changed the dynamics as we discussed in the previous episodes with regards to the structure in the market. And we could make a comparison between the Bitcoin pricing and the Ripple pricing, for example, and see how the lack of that higher high along the way back there on the 1st of December actually has made a huge difference to the structure, as we've seen further downside on Ripple and higher prices on Bitcoin today. So let's just take a look at the charts. Thanks so much for joining me, really do appreciate it. Welcome to the chat, everybody. I can see Zoner and KDoc in there already chatting away. Good to have you here. I disabled the high feature on the Nightbot because I think it was just too many highs were going in there. So if you're expecting Nightbot to say hello back to you, I'm sorry to disappoint. And right behind me at the minute I have the Bitcoin USDT chart, the 4-hour chart, and we can see the prices have come in here and been able to put in what is actually still currently, a lower high, and move towards our upside target, of course. Partly as a result, obviously, by virtue of the fact that we have this high over here on the 30th of November. So we've come in for this lower high here. If I just pop the drawings back on, you can see what this really means in terms of the price action. Well, we're still quite a ways away from that target that we have towards the top side currently, and that remains in place then as a result of that, and that's 19,800 and what do you want to call it? Do you want to call it 19,900 just for the language sake? I think that's what we'll go with. Now, if we see prices dropping down and actually closing down below the 19,350 area, then it looks like we're going back in to retest the 19,222 sort of point there where we had our previous profit taking line. And if we fail then at that point, then of course we're looking at the structure here kind of coming back down to breaking down the way, and us looking back down again potentially as low as the orange line over here in the mid 17,000 region, because of course at that point what you'd be saying is that we have this lower high. Now of course if we go on and put in a higher high, that changes things significantly, and it would be maybe a good idea to then look to the oscillators down below and see if we have any sorts of divergences or any of that on the go with them. And well, as we can see here, if we were to come in for another high just now and push on the extra $300 or so currently on the 4-hour time frame, it would look like we'd be most likely to put in a bit of divergence if we were to then retrace from that area. So what that kind of means for us is that we would need to see it coming in with a bit of momentum and pushing past 19,900 instead of just closing there and then withdrawing from that area, because if we see that happening, then of course that would then signify a lack of that momentum towards the top side. And we've got that highlighted to us in the potential for divergence here, as opposed to, saying there is divergence, etc. It's kind of along the lines of there's the potential for it. By the way, if you're wondering, the light behind me is, I'm not able to change the color of it right now. It says this whole can't connect to network rubbish. So if you're wondering why you can see the legs of my piano and whatever in the background, that's what's going on there. I'll endeavour to get the colourful lights back before the next episode. But what was I saying there with regards to this high and how that's led to this structure? Well, I thought I would break the pattern for today's episode slightly with regards to, instead of just doing pure crystal blue meth like Walter White here with the Bitcoin technical analysis alone, I'm going to actually put a bit of that chili pea in there and go over and look at XRP just real quick. I think I've already got it saved on my chart here, so I'll just grab that because I'll have some drawings on there already. So give me a second and I can show you the sort of what we see here is this 5% decline in the day for Ripple, having come down past all these points. And what did we not see after we put in the highs at the end of November? Well, we didn't see another higher high coming in, and the structure wise, that's just led to us going down here, seeking out whether or not we're going in for this lower low actually overall here, as opposed to the Bitcoin price action, which managed to benefit from that weekend relief that we saw by coming back up towards the top side and putting in this gap over here on the CME charts and maintaining its structure in terms of the 4 hour time frame up above this yellow line, which is the 8 period simple moving average, or exponential moving average there. And how are we doing with regards to the 24 hour timeline then, since this is what we're looking at? It's the same structure applies on a broader sense. Of course, over here you could be looking at several things. For instance, the potential for a pattern like a triangle on the go in and around about this zone here of whatever type of variety, of triangle that you want to go for. Currently, we're still in a position where if we don't close up there and put in any highs and put in a lower high and go down towards the downside, we'd be looking at the potential of a symmetrical triangle and then hoping for a higher low thereafter. If we do go on up the way but don't actually manage to breach the previous highs really and continue towards the top side and put in an equal high or one that thereabouts, then we could be looking at the ascending triangle, and of course that still puts us in line for the potential to come back down and fill out this gap. And if we did actually come down the way here, the measured move and break out towards the downside could put us into the risk of going down to these much lower areas, of course, if we were to go for the full one. But we'd have to bear in mind that there is this fake out potential with the other gap that we have on the go here. If we were to then not actually successfully do the full measured move, then we'd have to be aware of this area here in terms of our fake out targets. So you'll also be wondering why I said Christmas predictions or whatever it was on the thumbnail, and I thought to myself, maybe I'll do some of that in today's episode. Well, all of this boils up to that because of course we look at things on the bigger time frames, so we can also do a bit of that, and I will get around to doing that at some point, so don't worry, it won't be just pure clickbait. By the way, hi to everybody in the chat at the minute, such as pardon me, Tony, Quaz, Elrond, EG, and I don't know if we've met before. Hello there. Rocky, what's up, bro? Says Tony. It's all good here, mate. Hope you're doing well. What's up yourself? And all of that good stuff. Good to everybody. Good to see you all there, by the way. If you want to fling a like my direction, then that would be appreciated. Let me just actually get my live screen tab up over so I can see the chat and everything else as well as we're going along, so don't miss out on saying hello to anybody. Elrond, ELG is gold. Steve, see, is it you? Is it our friend XRP is gold? Well, you did tune in time, obviously, to see that little comparison that we were making between the XRP prices. You'll have seen that in the analysis we did the other day, of course, as well, because you were tuned in for that. So yes, great. So what do we have in terms of the positive case scenario for us looking towards the top side? Want to keep things nice and simple. So what is the simplest way of doing this? Well, we can say that we've already discussed the bearish side of things, by virtue of the fact of everything we've talked about with regards to where we would see the prices going to, whether or not they turn around on the 4 hour time frame and go past that 8 period EMA down towards our previous profit taking line, that blue serrated line we had on the charts there, and then on beyond that to particular levels, for instance measured moves off the back of any ascending triangle type attitude that we might have on the go here, looking down potentially as far as 14,800. Of course, as well, we'd have to be aware of the 236 coming in around about this 16,500 area as well in the CME chart. So we've done all of that. What could we talk about in terms of positive attitude stuff? Well, of course, we're in an uptrend in general, and this low that we put in here on the CMEs, obviously this is what we're looking at right now, came in with bullish divergence on the low during the uptrend. So that is hidden bullish divergence by virtue of the fact here that we see the RSIs moved lower than the previous low over here. Going back over to the Coinbase. Is this Coinbase or is this, no, this is Binance, to the Binance chart, just so we can kind of draw that out, a little bit clearer. We had this low over here, and between these points, this came in for a decent retracement as well against this move back the way, satisfying every sort of negative need that you would really have to have. And then we move towards the top side thereafter, putting in that weekend gap. And from a bullish perspective, I suppose that could be like, this sort of breakaway style. It's not really breakaway, it was within the previous price action, but you get the idea, this sort of positive momentum break up towards the top side, which gives us very clear ideas in terms of managing our risk. If I want to just dive on down the way towards the lower time frames as well, we talked about, was it not on this chart because I'm not seeing it right here, there was a sort of symmetrical triangle effort that we had on the charts yesterday, and obviously we've kind of had our measured move off the back of that one, taking us up towards these highs here at this point that we've seen the prices coming in at twice now up here, putting in bearish divergence on this 1 hour time frame at the top side. So unless we continue on the way, then that's what we're looking at on the 2 hour time frame. frame, same. The divergence very clear. 3-hour time frame, the divergence is there. The 4-hour time frame, the divergence is there. The 12-hour time frame, the divergence is there. So, you know, the ball's in Bitcoin's prices court currently. You know, if we want to make it so that this is not the case, and all of this divergence that we've seen along the way here across the board with these oscillators doesn't actually, you know, pay out, and instead the hidden bullish divergence we saw at this low actually turns out to be more than simply the enough impetus to create that gap, i.e. we don't really go on to fill that gap and don't fill the one below, certainly don't put in another lower low than this one, etc, and put in that high, then of course then we're looking towards these targets towards the top side. So that's going to kind of more or less wrap things up there in terms of what we're looking at in terms of just introducing this, and I'll come back in a wee bitty and do the Christmas price analysis stuff, I suppose. By going up to higher time frames. I'll just make life easier by moving on to taking a look at the other ones that we take a look at on a daily basis. Okay, Steve, I see you coming in here and asking if I would take a look at the TA on Elrond, and I will, and I'll do that just before I go back and do the Christmas style predictions, right? Because what we have on Elrond is a chart that looks really, really kind of not bad. It's a chart which is which leaves a little bit to be desired in terms of its liquidity, really, on the lower term time frame. So it's much, you know, lends itself to be looking at on these bigger time frames as well. So that'll then give us that momentum, and if I finish up looking at on the big time frames on that, to sweep back through the rest and kind of take a look at things for Christmas. Ethereum here is still performing along the exact lines that we kind of have suggested that it possibly would. There was actually a few things I wanted to do in terms of broader stuff on the other Bitcoin chart, so there's plenty to look at when we come back to that, in fact. So I'm looking forward to coming back to that as well, actually. All eyes on Bitcoin as ever. But Ethereum here doing exactly what we said it could do, and has kind of just continued on the way along with that. This is 24-hour time frame. We're very much within this pattern. Obviously, we've had this on here for long enough now. We know the key inflection points of this, so it hasn't changed an awful lot from what we've looked at in the past. Now, breaking down below this 30 area, this is versus Bitcoin, by the way, Ethereum versus Bitcoin. Breaking down past this 30 area, negative. Going up past the top side, good. The reason for the 30 area being so negative, that's where the 236 comes in at. Moving up past the top side, fake out zone comes in at 31. The next target actually is up at 33. That's offering you a nice 10% move. Takes you up for the fulfillment of this, in the sense that it could come up for a double top as well. And I'd have to look for that in that extra sense in terms of the importance when you're looking at the failure, if you like, of a descending triangle pattern. Because clearly the measured move is going to go between the high at the start and at the low, you know, at the start here. So that's where the measured move is. So you don't even need to do anything to work out where that would be. That's obviously right here at the 50% line, and that comes in at 33. So that makes sense. That's cool. YouTube is not receiving enough video to maintain smooth streaming. I'm sorry about that. If there's an issue with my broadband at the minute, can't be helped. Hopefully everything just goes smoothly enough. So that's what we're looking at the daily time frames. We need to be aware of movements past the 30 area, up to 31 with momentum. We have hidden bearish divergence on the go in 24-hour time frame here. So anyway, this is obviously going to come out in the wash between how we see the Ethereum and the USD pair both performing versus the dollar, as opposed to specifically this one leading the way. This is more of an analog. But it's interesting to see, right? Because then we know if there's any sort of disconnect going on, what this could mean in terms of the other charts. So what we're looking at there overall is potentially a negative picture, potentially for Ethereum, with the potential for a 10% move up against versus Bitcoin. And in a sense, that would mean that if Ethereum maintained its price against the dollar and didn't drop down, you'd be looking at a 10% drop in the Bitcoin price, perhaps, to sort of create that fulfillment from that pattern. So maybe that's a bit of insight for us. Of course, then if we see the prices going up, etc., if we're looking for a 10% disparity between the two, maybe that's enough of a clue for us looking forwards here, and hints towards that Christmas sort of resolution, I suppose. On the dollar pair, just hiding off the drawings for now, you can see we're in this consolidation phase. Pardon me. And again, what a difference a high makes. You know, that this difference here being distinct from the sort of XRP chart and various other alts out there that had a nice big rally but then didn't follow through enough to sort of affect, you know, for instance, the Bitcoin dominance chart, particularly, which has also continued to rise up since December. as we can see here, after that big move up in the alts, which we saw there. So we've lost some ground there in terms of the altcoin position. Looking at that chart, looking at the total chart, you can see it's obviously falling along almost neck and neck with both the Ethereum and the Bitcoin chart. Jumping then back over to Ethereum so we can see that in action. There we go. So you can see how the big players in the market are dominating things in terms of the money flow at the minute. Okay. Cool. And this is come in here, and if we've not managed to take out the left peak on the 24th of November area, so you're still on for a potential head and shoulders pattern. We've not crossed over here, so there's still the positive trend as a result of this moving up the way. But of course, if we could see the DMI crossing over very soon, and what we need to see happening is the prices moving up into the above $600 area for us to start to get a bit more content with this one. We can see, of course, we have hidden bullish divergence here on the MACD, on the RSI as well, between the previous two lows, this low and this low, the two higher lows, going back again to the third low back the way. Then you could maybe make the case for having had for having had convergence between these 2 points before the divergence came in, or just to make the case between the most significant areas and where we've been putting in recently in general, and saying that there's that bullish nature, that the failure towards the downside of any sort of moves so far. But this is all within the framework of really essentially consolidation. It's this higher high, what the difference a high makes here coming in, that allows us to talk along these lines. Now, if we wouldn't have this here and this was lower, then we'd be talking about this being consolidation, and I wouldn't really even be that tempted to draw. I'd be tempted instead to ignore the hidden bullish divergence there, because I tend to avoid looking for that too much in terms of consolidation patterns, because really then all you're doing is just adding bias to the bias that you would already have in place in terms of equal opportunities pattern, which would be going with the prior trend anyway. If you look too much at hidden divergences during consolidation, it kind of messes the picture up a wee bit. But during big trending moves, looking for the hidden bearish divergence, which is why I'm bringing back the context of the previous lows before we entered the consolidation phase, and of course as well by virtue of the fact that this is a higher high, we can talk about this as being a trend and move towards the top side, where we are in the middle of a range currently at this 585. We're looking up towards 621 as our highs, down there at 537 as our lows, and various other ways of coming towards the same sorts of conclusions in terms of potential movements for us. Zooming on in here, you can see that we've actually touched the 618 golden pocket, so we could maybe say, in terms of if you're looking for a bearish basis to be going on at this midpoint of this area here, if you're looking for failure immediately aggressively before things actually migrate towards the top side, your target there is to take out the low 540 down to 520 zone here in the price action if you're looking for that bearish boom down the way, and that would obviously need to be initiated right now. But taking out the 618 towards the top side comes in with other targets like 613, 622 before you really go on to then, and I know that's what we're talking about in terms of those targets. If we do then look for a turnaround post that area in terms of where would be a good profit taking target, 648 comes in as a clear candidate for that in terms of the backward, just looking back the way at the channel overall that we really are actually in terms of the Ethereum price action. Now, of course, the bearish case is supported by the fact that we've come up here and touched this a couple of times and moved away with the bearish divergence on the go, putting in a nice top of a channel potentially for you if we kind of just take this moving this here off then in that sense, and instead look towards where we would need to see for the prices to move down from this rise to go towards these lows. Just first off, if you were going to consolidate further, then we would only get to the 618 of this Fibonacci that I'm drawing in just now. So if we're going to just consolidate further, then look down back again, maybe for a potential $30 move towards the downside. If we go on past that point, then of course that's the key area of why sort of that 650 zone would be the last of the positive $10 chunks. And then you go into that 540 zone, things start to look a bit more negative. But then of course you could stay positive on this until you really went below 538 and then took out this previous low. And those are the numbers then really. I suppose I could have done a better job of making them clear for everybody, but those are the numbers with regards to the Ethereum price action right now. Overall, of course, upward trend, this higher high, what a difference it makes, yada yada yada. The story has been told. Just jumping on over then towards Link and Tezos, and we'll go back and we will take a look at what you guys was suggested as well during the show here by the way. But just first off, I wanted to draw attention again just in today's episode once again to this concept between the linear and log. In fact, I wanted to change this screen slightly so you could see if I'm using linear or log. If I just drag it down a wee touch, pop it up a bit higher on the stream. That's not working so smoothly. I want you to be able to see if I'm on log or not. So just now you can, down here, if I were to be clicking this area on the chart, changes between them, and you can see that the general idea here in this demonstration that I tried to publish on TradingView as an idea just for the crack, is that you can learn a lot just by changing the dynamic on the way that you're looking at the axis here on the right hand side for the Y price area, price axis, the Y axis here on the chart. And of course we're in an ascending broad and wedge, or we're in a channel here just towards the top side. Either way, you know, if we don't see the ability to take out this area essentially where we've had all of our previous lows coming in at, which we did push down past previously and come up, and we're kind of retesting at the minute. If we don't manage to take out that zone, you know, this thing that I'm getting at, then of course this is quite negative. But and we can really narrow that down at the minute just with the by putting that back to where it was before in terms of things look negative if we go down past our previous lows, obviously. So identifying that with this white line's handy enough. But here at the 236, that's where that would be if we were able to push past the 236, coming in there at 1354. Things are looking good. Otherwise, not so much. What we've seen over the last today and yesterday is really fulfillment of what we've been talking about in terms of the price action. Just going down to the 4-hour time frame, really over the last wee while we've been asking about either we can push up or we can push down, and we've come back down to where we left off from, and we're just ranging around here until we're able to break out of this little sort of formation of consolidation, and then we're looking up towards the $13.30 and $14, or else down towards $11.60, and then of course our target it's in the 10 down to $10.30, or perhaps even just $10 flat, depending on exactly, you know, what the momentum and whatnot looks like at the time. That's Chainlink for us. In terms of the 4-hour time frame, negative picture here in terms of any momentum, with, you know, it's a positive picture in the sense that the positive DMI is up above, but you know, we're not seeing the momentum there for us. It's just kind of chop, as we're seeing with this price action there. We're seeing the symmetrical triangle here kind of tightening of the spring on the go, and we have a little sort of trend line on the RSI and the 4 hours here just in the short term in this head and shoulders kind of skewy formation. And of course that just kind of ties in with the same story of either way in terms of what perspective you want to have on it, whether that be head and shoulders or triangle. You're going to end up with the same measured move, right, you know, in terms of these things. So I always like to remind people of that sort of dynamic when you're looking at things, and that would bring us back down to testing off the bearish control zone, and maybe then we'd see a good entry if we're going to continue the overall upward trend, which you can see in the 24-hour time frame. It has been, you know, towards the top side, but are we looking here and saying that this could ultimately come in as a lower high on something like these weekly time frames, you know? So this is what we need to bear in mind when it comes to coming back here in a minute or two and looking at the price action for Christmas. In terms of the Tezos price action as well, here in the weekly time frame, you can see that we're still speculating with regards to this overall head and shoulders type affair. Zooming back out again so you can see it. So on the 24-hour time frame instead, you know, this zone still in question. It's the same price action, same story as yesterday, which is quite handy for me. Nothing's really evolved overall. We're still in the same zone. So I'm just going to jump on down to the small time frames and see if we're seeing anything more revealing with regards to this price action that we've had over the last, well, a wee while. I mean, we were up 0.7% on the day, so we're not doing too badly. There is this threat emerging here of the potential of a rising wedge in terms of this structure. We've obviously got a shit ton of touches towards the downside. We've only got the 2 at the top side, so you know, we can remain sort of cautious with regards to getting too carried away with looking at that. Instead, what we should maybe be thinking about is the potential for this to happen at some point, and if we come up towards these zones and don't manage to take out our previous highs, in which case we can kind of make things a little bit more simple on ourselves and say that this is the general structure that we're looking at with regards to the price action here for Tezos. This nice green line here, if we can get above it at 232, I suppose, then of course we're changing the dynamic with regards to the threat on the small term time frames of this turning into a wedge. Failure to do so, we can revisit that idea and we'd be looking at a movement between sort of the 219 down to 2, so that would be coming down from anywhere around about 220. So yeah, so you'd be revisiting back down to that $2.08 area if you were to get a measured move off of that. I just couldn't be bothered drawing it in, excuse me, on that front. We don't have divergence yet, having not taken out this high here, so while we're consolidating here, this is decent. When people talk about this, and I talk about these examples from time to time, so I really ought to remember to always sort of take a note of it when I do say it. When people talk about consolidating at support or resistance, if we want to kind of bear in mind that it kind of currently right now we're at a resistance support zone, I could very well have easily have drawn that line that I had up there down here really anyway, right? And if people say is it good or bad, that discussion point, is it good or bad to be consolidating at a point of resistance or support if you want to look to break through that resistance or support for a move continuing the trend? Is it a good thing or not? Here is a decent example where it shows that it quite frequently can be a good thing if you apply the common ideas behind what it means to be consolidating at the area of support with the idea of divergence. If we look down here, for instance, on this Tezos USDT 1 hour chart, with the resistance potentially living above our heads there at 225, and we could have gone up above it several times recently but haven't done so, that signifies a degree of weakness, where we're not able to push past an area and put in that structural higher high. And that's not a great thing in and of itself. But let me ask you the question, what if we had done this at any of these points over here? As you can see on the DMI down below, that would have turned out divergent. On the RSI, it would have turned out divergent. On the MACD, would have turned out divergence. And we would have had divergence all across the board, showing this weakness on the way up. Instead, consolidating in this area, which could potentially be an ascending triangle, gives the chance for the oscillators to slightly dissolve that divergence. Looking back, it gives us a chance to put in a few smaller highs along the way, almost, where they're not necessarily divergent in and of themselves, and build up a degree of momentum. And it gives us the great benefit then of being able to have an excuse to look towards the top side in terms of a measured move, for instance, off of this triangle, if you consider this area here to be the triangle and that to be your measured move, which would take us up to the 236 area, putting us past what is currently a key inflection point on the Tezos USD chart, and as well having benefited from the fact that we were consolidating at an area of support or resistance. That's a key concept to bear in mind as you're trading, and it also comes into play with ideas like the cup with handle, for instance, where you put in a twin peak and then you come back down, and it's not the same as a sort of consolidation pattern along the lines of a symmetrical or ascending or descending triangle. However, it's the same sort of concept where you're building up a degree of momentum, shaking out the participants from the market who need to be shaken out in this momentum, in this move, and then gathering that momentum once you've satisfied your big enough orders, and then move things towards the top side. And that's what we could see with the potential for this to happen. Looking at the 1 hour chart in the background, we also have this flashing signal from the DMI here saying that we've got volatility in store. So if we saw something happening, I would also then need to keep a keen eye on a potential fake out zones. If we did get a measured move outside towards the downside, of course, as well, we're looking down towards sort of $2.13, and that's how the failure of that consolidation would also work as well against you. And that's what the argument really boils down to when people talk about consolidating at support, or what they mean to be talking about, or what they're trying to kind of articulate is this idea right here: is what type of consolidation are we doing at support? Is it giving us the ability to avoid divergence or not? And can we then use that to create momentum to fulfill either the move which continues the prior trend, or indeed as the jet fuel you might need in order to do a turnaround and go for a different trending move, or indeed a retracement against the overall trend? If we were to do something like that at this point, it could just kick the can on down the road, and then we'd be looking at that cup with handle that we kind of intimated. And I don't have the volume on at the minute, but this would look like that if we came back down towards these points and did a fulfillment of this measured move, taking us into the 50% area of the basin, and then giving us a third bite of the cherry later on. So that's how you would think about this and put it all together. That's a little tip for people. And yeah, cool. So jumping on then, that's all the technical analysis for that. I'll go back through the time frames then as well, looking at things on the weekly basis so that we can have a quick idea about what maybe the technical analysis for Christmas might kind of look like. If we get a resolution to this head and shoulders concept here that we're looking at on the Tezos price action for the top side, then we could be looking at this coming in with the in the next couple of weeks, which could then line us up for that Christmas target, and that would give us a measured move going from 178 up to a neckline area in out of that 238 area. So you're looking at a 60-cent move potentially breaking past this point. So if you take it from 250 or so, you'd be looking up towards 320 perhaps, you know, in terms of your move, or the $3 area. So you'd be able to take out those targets we've had in mind along the way of the 289 area. And of course that lines up nicely with what one of the Rocky Outcropticians said, where they were hoping for 289 by Christmas. And can we follow you on TradingView? Rocky says TradeSpot in the chat. Yes, you can indeed as well. My username on there is, wait for it, drum roll, Rocky Outcrop. I'll show you that actually here in a second. If I just go publish an idea and say an idea and publish idea, let me just say this is testing. Category beyond technical analysis. That's it. XTZ. Right, here we go. Yeah, Rocky_Outcrop, that's my username, and that's how you would find it, and that's the idea that I just published there now as well. So if you want to kind of find me on TradingView, you can follow this link to that idea that we just put on there now. Of course, it's obviously a bit of a placeholder idea. Let me just jump on over back to the charts then and carry on. So we could be looking towards a 320 move, potentially at the greedy end if you want to be very greedy, 289 if you're looking to take profits on Tezos by Christmas time, if things go nicely along the lines of this head and shoulders type concept at the bottom of that trend. If we take a look at it as well from with regards to where our previous highs were coming in at 265, that we put in our previous lows in here at $2, that is of course both a higher high and a higher low, and we've so far moved towards the top side since, confirming this as a local low, and that's good. Movements then beyond that 225 area and the 265 area put us nicely in line for those $3 targets really for Christmas, if that comes in at around about where our next high would be. And this node on the VPR kind of VPVR shows you that of course we start, you know, looking at the profit taking coming in at around about that 280 area if you're looking to trade this along those lines. Jumping over towards the Chainlink USD pairing, where could we be looking at for this in terms of the Christmas potential? In this chart we can see that we've got this upward channel. If we're able to maintain price action staying above, you know, the generally speaking staying above the $10 area, or $10 to $11 area, without, you know, kind of losing our upside structure here, then we could be looking up towards the next area and what could potentially be a sort of upward channel, and that takes you all the way back up towards our previous all-time high. So if we're looking for all-time highs with Chainlink again, then that could be on the cards for Christmas time. Of course, we need to have various things work out in our favor. For instance, and I know this is a bit of a mess on the chart here, but down here in the RSI, we don't want to be breaking down past this swing failure points here, for instance, or any of that sort of stuff. We don't want this to turn into head and shoulders and get negative momentum towards the downside, and we certainly don't want this to be like an ascending broadening wedge, as it very well could be here as seen on the linear chart, in which case $7.29 could be that present you're opening up under the tree if you're looking to buy some cheaper Chainlink. Okay, so it depends on what your perspective is. You might be looking at this from a bearish point of view, and that might be your white Christmas dream at $7 and whatever that was there, $7.29. So if you're looking for that sub $8 Chainlink, it could potentially happen. I think that we're on the way potentially here for a good Christmas with regards to Chainlink, but what we need to see happen is going to boil down to in and around about this mid-range area there. If we can stay above the midpoints of the sort of $12 area, then we can look towards the higher numbers. Let's hope that it's more of a logarithmic type idea here as opposed to the linear one, and that it doesn't look like it's a million miles away from getting up towards those previous highs. And $18 would be my profit taking target if I was going to look at that instead of, you know, going the full way towards the 20. Now of course let's beware that movements down below $10 could see us getting a further 30%, 25 to 30% off the price of that one. Jumping over towards the two main big daddy old coins, then what we're looking at with regards to Ethereum and Bitcoin. If we look at this chart here, we can see it's the Ethereum Bitcoin chart, and we have a descending triangle on the go, which could see a 10% move happen either way. I'm not particularly concerned about this chart right here in terms of direction of it because I'm looking more towards the USD pairings for that. But of course, we could be looking at this in terms of the rocket fuel, perhaps, if you like, or a magnet or something like that. If from the weekly point of view, it would be no great shakes to do 10% in either direction on this chart. As you can see here, movements down towards 26, 27, 28 are putting in potentially a higher low. Movements up towards the 33 area, simply putting in a lower high. So that's not a massive deal to think that that's potential for during this month, but that is something to be considering as well in terms of the monthly time frame. We have actually on the Ethereum chart here done just enough in order to have pulled back here, or no, sorry, not done just enough. I've done fine here with regards to our positioning outside or within the Bollinger Bands, you know, and actually looking over towards the other two pairings, just so you know as well, in terms of the Link USD pairing and the monthly, we're still within the Bollinger Band, and in terms of the Tezos USD pairing on the monthly, are we still within? Well, maybe it's not going to show up on that chart, but yeah, I think we pretty much are. If we're to go to one of the charts with the more history on it there. Anyway, we've been trending towards the downside on the longer term for this one, so it's about whether or not it turns around. With regards though, however, towards the Ethereum USD pair, and before going back over to Bitcoin and pointing out this dynamic here that exists with regards to the Bollinger Band still, in terms of where we could see things going over the period of the next sort of, you know, month or two, then which is here and showing us that we're outside of it and we could come back down and retest it because we haven't had that happen yet. What we're looking at with Ethereum is this upward move, and in terms of the monthly chart, you know, it's positive and we've got this upward trend, and there's nothing much to be really said about it other than the fact that it's coming in without divergence, if you can consider these inflection points here at 225 and 358, and then kind of where we're having it at 550 to be lows along the way. We actually are outside of the Bollinger Band here on the ETHUSD pairing. Sorry, just exactly what I was looking for. I don't know why I got confused, but there you go. But you can see we've done enough in terms of coming back down here into the Bollinger Bands, you know, to have kind of done that retrace, which is your minimum expectation statistically speaking with this thing, and we could see this moving around. So that means if we kind of stay above this point here of the sort of the five, like I was saying during the analysis for this, if we stay in the upper 500s, you know, then good. If we go down below those upper 500s, then we could be looking, of course, for negativity. In terms of the Bitcoin or the Ethereum pairing, the Ethereum USD pairing, in terms of the weekly time frame and what we're looking at here, there is that bearish divergence, you know. So what we could have is, of course, this potential for us to be coming in with some sort of potential to pull back from these zones that we're at here at the top end of what could potentially be, and of course that stick is very much positioned wrongly because of the logarithmic relationship here, but you can see that we could obviously be in a wedge. So that means if we do move towards the downside and take out 482, we could be on for a very sort of scary Christmas towards the downside here. Taking a measured move off of this, then of course you could be looking down towards the lower end of the Bollinger Bands here in 250. So that would be your scary Christmas Ethereum pairing pricing. But if we look towards the top side, it actually does take us up towards this above 700 area, you know, in terms of a measured move off of this. So there's a potential as well to go up towards even $858 if we want to be real about this thing. You know, of course, on the logarithmic, you're not getting much of a movement up there, but if things don't go along the wedge on the logarithmic chart idea and instead fall along with the linear chart channel type idea, then of course, looking up the way, we would be pushing it to get above $700 by Christmas, and hoping if then, you know, it would be a bit much to hope for significant movements beyond 500 before Christmas as well overall, if this structure maintains, staying within the sort of top half of the Bollinger Bands overall. Looking then at the Bitcoin USDT pairing for Christmas. Oh, I forgot, I was supposed to do Elrond before running back through them. I'm going to do Elrond, Steve, don't worry about it. 1313 resistance on Link has been an a-hole, says Zoner. It has, hasn't it? It has. Right, here in this weekly chart for, or no, sorry, the monthly chart for Bitcoin, you can see, if I just hide the drawings and make it much easier for you, that we know we didn't actually touch the Bollinger Band. But what you have here with the fact that the prices have moved up to where they currently are at this 950 area is that ringing alarm bell of, you know, That sounds so dramatic. What we're looking at here is the success so far in the movement of the Bollinger Band up to close that gap between the wick and the band itself, with the result of the price moving up into this area. So if we do see higher highs this month, then this resolution will have already happened with regards to this wick down the way, and we wouldn't necessarily be able to anticipate a movement down here. Now, of course, that then puts the focus back onto those targets we already had at the start of the video, talking about Bitcoin with the movements, and of course talking about the difference of what a difference a high makes and whether or not we could be going past those other lows. So that's the key for us really. And looking here then, if we do go down the way, then you could cascade all the way down as far as the 17,500 areas, of course, by Christmas. But if we just kind of acknowledge that that's potential to be outridden, if we go on to turn this candle green, then this will get touched probably. Then what we're looking at is down here on, say, the daily time frame ideas, and saying, well, no, the weekly time frame. We've got 2 weeks. What could the next couple of candles be like? If we look back the way and say, well, this candle, you know, big movement up, green doji, big movement up, or sorry, big movement up, red doji, big movement up, red doji-esque, or was a hammer, and then a movement here. We're losing some of that momentum that we've had during the inflection, but if we can actually maintain these highs and not go down below 18,200 or 18,000 really, and stay on this track, then we're still in line for a 20,000 Bitcoin Christmas, you know, 21,000 Christmas, you know. And if that happens, then of course we're looking at big, big potential for another movement up the way. We've had several of these along the course with these distribution phases, or accumulation or distribution, or whatever. The consolidation phases that have resulted in the price action going to go sideways for a while, post movement, and then maintaining structure in terms of the overall upward market. We had this one that lasted for a few months and didn't follow down the way. So in terms of when people talk about how you can kind of get that sort of capitulation through sideways versus capitulation through capitulation in the typical sense, you can see two examples of it right here. So maybe that's a good one to put a marker on here and just say again. So unable to, right, cool. So sometimes what you hear about is people talk about how markets can capitulate by just going sideways, and sometimes you can hear about how they need to actually properly capitulate in reverse in price for us to really see that resolution to a consolidation phase. Well, what we can see here between the Bitcoin and the Bitcoin USD pairing between May and August, more or less, was a consolidation phase which dragged on sufficiently long enough where you could say in a sense that what we saw was a resolution to this, or capitulation through this extended sideways movement during this upward trend, where eventually something had to give, and what it was the prices towards the top side. In this period here we were consolidated and something had to give at some point. What was it going to be? Well, either we would kind of move along sideways in the same way that we did in this zone here, or we could move down and then trend towards the top side, with the ultimate resolution of this structure coming in when we took out the head and shoulder of this head and shoulders in the upward price movement. So as you can see here, we capitulated by moving towards the downside, and it put in a higher low overall. So market structure from the broad macro perspective was maintained, allowing us to then move sideways and get some trend in action and grind back up the volatility and the volume again on the charts to the point where we got to here and volume properly kicked back in, and we moved up again with the price action. Over here what you see is the same sort of distance in time, but it just didn't have that downside target coming in again here, and instead moved on up towards the top side at a time where it put in around a professional gap on the charts as well with that CME chit chat. So that's a handy thing to know with regards to the two different ways of ending some sort of phase of a trend or whatever, or indeed, you know, continuing that trend, whatever. I don't know if that was a good enough example to make into its own static video, but anyway, that's that whole sideways capitulation. Anyway, it's crap. I don't really like it as an idea, but this is the most relevant type example that I've really seen of it for a while, because you just don't see it that often. And I don't think it warrants having the word capitulation tied to it, but that's what it is. By the way, if you're looking it up, there's like two big types of capitulation that you'll see: the sort of the recovery or the turnaround, whatever, in the markets, where you see it coming in with volume, or this. Okay, time-based capitulation they call it. I agree with you, Zoner. It's BS. Anyway, had to make it because that's what we do on YouTube, technical analysis. So anyway, in terms of the Christmas story, we have the Christmas lights get turned on at 20 grand. The fuse gets blown on the Christmas lights at 17,600. In terms of, you know, all is it tears or smiles, tears of joy or tears of sadness? The sad ones come in there at 16,114 in terms of your targets for Christmas. We are in an upward trend. Yes, we have this all the difference a high makes. High in here, yes, it is bearishly divergent, but we've seen these things happen. So what could happen is the three scenarios. One is we move up past either we're up past the green line. Two is we move past the red line, and that would be a trend change in one, or three is that we kind of go sideways within those two, right? That would be kind of the three, and you can see that we're a lot closer to the green one than we are to the red one, right? So that's kind of the idea about it. If we did go down there and move past this point, the red line, that's the equivalent of actually taking out this point over here. In terms of this capitulation, we wouldn't want to see that if we're looking for increased prices. We don't want to see the prices going down below there, because that's the equivalent of going down below 9 grand after the prices had gone up as high as 12. That's what that would be. So if we're going to see a movement down the way, any movements down the way could take us down towards our blue profit taking line by Christmas, and then on up the way, and that would be the equivalent of that type of thing, where we can get to the resolution of this bearish divergence before then continuing on with the macro trend. And it's the bearish divergence at the tops here that's making me say all of that. Elrond. I can't even remember the thing of this. That's what it is there, isn't it? Let me know, Steve, if this is the right one. That's it. You've got frozen turkey, raw turkey for Christmas at 16.6 or 16.1. Right, cool. So this is the Elrond chart, and it does lend itself to the higher time frames. So dive down the way towards the lower time frames. That doesn't look too terrible, actually. What was I looking at before? It's with the Bollinger Bands on that it looks terrible, isn't it? No, is it just this has got more volume than the other chart, or am I just not seeing things properly? Well, it doesn't look too terrible here right now. That's good to see. Where was that stuff where it looked terrible really recently, though? Am I on the right one? Must be on the right one. Maybe I'm just confusing this with a different one in the past. What have we got on the go? First off, let's look at this from the point of view of three things. Of the yellow line here, which is this small term moving average, the Bollinger Bands themselves, and then market structure. So first off, let's do that by looking just at it on a clean chart, and I can add on extra EMAs and all the rest of it as well as we go, and I'll not even bother with the VPVR. But actually, the first off, VPVR draws in some clear levels for us very easily in terms of inflection points. So maybe we should have them on there to begin with. Just you know, you don't need the VPVR. I often say this to people who don't want to invest in a pro account, but of course there are some sort of immediate benefits to this thing. In terms of that there, in terms of just plopping them on. That's obviously the missing man here in between at this level. So these are our key levels for us. I probably wouldn't be too surprised to see that lining up with a few other things as well. But market structure wise, we're obviously in an upward trend here. Very, very nice. I'm going to want the volume on here. Where are you, volume? Show me. Good diminishing volume at this point, but overall the aggregate is towards the top side, so we have increasing volume. Obviously this spike here at this point makes it look slightly lower. Does that go hand in hand with some sort of divergence? There is bearish divergence on the RSI and on the DMI. The MACD managed to just scrape by without it, so there you go in that sense. And let me just have a look here then. Where do we want to call this in terms of the low? I'll also make sure I'm on the right chart, by the way, buddy, if I'm not on the right one. Do we want to take that crazy wick, or maybe here, which is closer to its starting price? We'll just go from there instead. And come into roughly that area. 236 is at roughly 20 bucks. 618 is at roughly 13 bucks. Yeah. Okay. So anyway, popping the Bollinger Bands back on. I'm pretty sure I was looking at a different coin before. I'm obviously not going to be able to make this a standalone video with me saying, oh, I thought I was looking at a different coin before every 2 seconds. Should have thought of that before I opened my mouth. This follows along fairly well with the structure of how you'd expect things to operate with regards to the Bollinger Bands, which is nice enough to see, because you don't want things to be too highly manipulated, do you? We can see, yeah, so we do have this bearish divergence, as you can see, along the way here, with the overall slightly tapering off of the volume on this lower time frame. On the big time frame, The RSI, the MACD, and all that look pretty good on the 24-hour time frame, but of course we're outside the Bollinger Bands. This could just keep on going. This is a more interesting one than what I've looked at in a wee while, I suppose. Oh, fucking excuse my language, sorry. Too much space dedicated to those ones. It's moved up very parabolically. I think taking that from over there is maybe the wrong idea. Look, I mean, obviously you've missed your opportunity in the broader sense of getting into this one, you know, and there's a lot, and this is a chart that we're looking at that inspires the sort of the FOMO type chat that you could have here, of course, as well, you know. So I'm looking at this and my immediate instinct is to say to people, you know, don't go in for FOMO. Obviously I was looking at the lower term time frames when I thought it was on the 24-hour with regards to these lines that I put in, but that's handy enough for us here on the bigger time frame anyway. I think a fair enough place to draw this Fibonacci in would probably come in from either that point or that point on the significant area before our highs. The Bollinger Bands doesn't do us much good on this point. I would say that there's a likelihood that we're outside of them on the 4-hour and looking red like that, yeah, and that makes it obviously important to stay above the sort of $23 area, or else we could then be looking towards a reversal, and then we could have the Fibonacci. Where's the Fibonacci going to look good at? Here, yeah, exactly. We'll go from there. This would be with the expectation of continuation towards the top side, obviously, which means that you're not really looking for these targets in general. You know, your first good buy price comes in at 21 if you want to be bullish on things, like which this trend would kind of suggest to you that you should be initially, and unless we see an absolute capitulation. And then you'd be looking, if we did go past 21, towards the three targets of 19.5, 17.9, so that's $18, and then 16.5, $15, $16. So $16 there, where we also have that line coming in at around about. So these things make sense that they're lining up. I mean, it's no surprise actually when you're looking up the way and you see these lines lining up that we put on with the green horizontal lines lining up with significant Fibonacci points. You know, it's not a surprise. Obviously 50% line comes in at around about 17,959, so maybe that's kind of and that's where we find as well the median line of the Bollinger Bands coming out as 382 and the 50% line. So maybe, you know, if we did see a pullback, then this would be our last low over here at the 382. Then maybe, you know, 21's a good buy, 19's a good buy. Questions come in at $17 if you push down past 18, you know, but 17 something is okay, I suppose, but $18 is the 50% inflection point. This is a harder one, you know. I don't want to say to people to buy into something or whatever. I do expect some sort of pullback on this currently, but let's just stick on the EMAs, hide off everything else. I'd take off the Bollinger Bands as well. They're not doing any good on this one. You can see we're tracing them towards the top side. That's all you basically got there, and then the median line comes in at $18, and that would be an easy enough, nice solid $5 down move. So talking about a solid 20% reduction in your price that you're paying for them if you're looking to sort of carry the trend onwards. Otherwise you're already in a position and you might be thinking about taking profit in around about these zones if that was what you're looking for, and that would be the real TA. But I'm trying to kind of like look at this from the point of view of something that'll last for more than just somebody who's in a position right now, or indeed somebody who ignores me and goes towards the future. 8-period EMA coming in at that $21 area. Yeah, some confluence there with those numbers that we're looking to if we do see a pullback. Yeah, the 4-hour 8-period EMA and the 24-hour 8-period EMA are coming in with those two numbers in terms of like where you would be looking for if it did pull back. The way increase in volume, it's done it. It's got it's got divergence here, and there's a potential for this to turn around. The ADX is way up there. You know, this is too new on this chart. There must be another chart. There must be another chart that this is on, where it's got some more history and whatever, because that only goes back as far as 29th of September. So let me know if I've been looking at the wrong chart. Thanks for hitting the like button. By the way, TradeSpot, really appreciate that. The DMI is showing divergence. The RSI has managed to come up without the divergence, and that makes me think that while we've got this doji here on the go, that we could be looking at the potential for to get in. If you're to take any trades, at the minute, I'd be very sort of judicious or whatever with them, managing the trades really, really tightly. If you want to try and sort of FOMO into something, then you'd be stopping out with movements down past $23. I think I said something about $23 at the start of the show or start of the LRON section. So that's what I'd be looking to. In terms of the small term time frames, 15-minute time frame, and you can see the divergence comes back in again. But as you can see, with this divergence between point A here on 14th of December up to the high here we had on the 15th of December, and that then here you can see divergence across the board, or well, not on the MACD as it happens, but on these other ones, that we just went on and put on more, so if you're looking to try and ride that wave up the way, then I'd still be looking towards all of these previous little consolidation phases. Of course, with every single one of these descending triangles that we've had, or symmetrical triangles, whatever you want to call them, I don't particularly care. This is the 15-minute time frame, so we're not talking about anything fantastic here. Obviously, this same mentality is what you use on the larger time frames, but essentially, as we can see here along the way, that we've been doing various things like this, and every time getting a bullish resolution to it in the face of bearish divergence, so that's the trend with this one, and it has got this diminishing volume here on the smaller time frames that we already spoke about. It looks interesting, it looks good. Things like that are worrying. Missed the move, viewership can get dragged into taking trades that are bad, off the back of over enthusiastic responses towards charts which look nice. I like seeing this. In terms of the weekly time frame and the Bollinger Bands, there'll be some interesting stuff maybe if you want to show up. Oh no, there are more Bollinger Bands. I need a different chart for this. I can't be using this. This chart sucks. Fuck off. L1 gold. What was it again? What is it? EGLD. Is that what it is? Is this what we're supposed to be looking at, by the way? I hope it is, buddy. If it isn't, then, well, sucks. So it's on OKX or Binance. Was I looking at that on OKX before? It was, wasn't I? Binance? There's your history. No, there's not your history. Anyway, this is quite obvious. We could obviously see extensions beyond this point, but right at this area here, it's not going to continue up so quickly in order to kind of keep up with this. So you'd see as a repeat of this over here if we did extend beyond it, and I'd be looking back towards this for rebuy points, which may end up being that, you end up, if it was to be an upward trend confirmed, by not breaking down past $22, having then had a rise up the way here, and then revisiting these areas on a subsequent pullback, then maybe they'd find yourself buying in it around about the price we're at anyway, but it exposes you to far less risk. In the meantime, if you were looking to trade this on a short-term basis, then yes, sure, you could. Generally speaking, I'd expect a pullback from this. It's not begun tracing this towards the topside yet, though if it does do so, then we'd be looking in these regions for re-ups. 24-hour time frame. Outside of it, tracing it towards the top side, can always look back towards these zones for re-entries. That puts us back in there. There's definitely 10% discounts I would have thought to be had, regardless, at whatever point it is that you are starting the trend, right up until we get up towards, of course, our previous highs over there at $28, and then of course then we've got a different question happening, because you're talking about all-time highs. Well, not really, because of this wick, but in terms of body closes, you would be. Is this the best chart that we have for this piece of crap? Is this relatively new? Is that what it is? Is this because it's like Elrond Gold started some other time, hit BTC? These usually got the history. Yeah, so at least it's got all of 2020 in there. Yeah, this is a sucky chart. A little bit more rubbishy. I don't know, whatever. See, this massive drop off in activity. If we do push up the way, then we could be, this is versus Bitcoin, is it? Yeah. See, I'd rather trade this versus Bitcoin at the minute, probably, if I was looking for an upside potential here off the back of this volatility period coming to an end, the downward trend, you know, it getting a bit, you know, burnt out here with this final movement before coming back down and crossing over, giving us a positive cross. We're just coming out of the chop zone. If we see this continue on and trade towards the top side, we could be coming into a lack of liquidity and give you really nice moves towards the top side with easy enough to manage risk in and around about these zones. I'd rather trade this versus Bitcoin at the minute with the potential for upside if this were to be the case. You know, in terms of looking at that, probably. I don't know. I would know it myself. I don't know. That might be interesting for you. It might not be. I'm going to go back to the chat. I'm going to put it on the BTC chart here and go on to the 15 minutes and catch up with the chat. Hidden bullish divergence into this dump area down here, you know, when we were down there at the low 19,000s, move towards the top side, come in here, put in our high with bearish divergence here across the board on all the oscillators. We've seen volatility come into play a little bit with the questions here. The ADX remains obviously in a position of strength. We see a disparity occurring, a divergence between the positions, you know, as we look away on the whatever. We see the DMI taken away. I wouldn't mind having the stochastics right now to see if they've crossed towards the downside. They probably have. This doesn't look particularly great right now with these movements. We're down past the median line of the Bollinger Band. Our previous low came in, tested it, obviously moved outside, moved back in. This is over here at 367. Taking out 367 is quite negative. We could be tracing down the way. We could also get our first taste of delicious lower lows by taking out this price that we're looking at right now coming in here around about the 392 area. So if we were to take it, if we go down to closing basis on the 15-minute periods down below 370s, 350s, whatever, that starts to look quite crap, and we could be negatively tracing this towards the downside, looking to come in here for a higher low versus our previous low where we retest this area for support, if that's the case currently. Otherwise, what we need to do is throw off the shackles of the divergence by coming in here and putting in a higher high and using this as support right now. The clear areas towards the top side are really 9450s, closures above 9465, 9470, really where the median line of that thing is. But not just looking at the median line, but looking at how that lines up with our previous high here on this currently downward trend, which we could be going on the way towards putting in a lower low of, and indeed that line towards the downside, 390s, you know, taking out 370s, then we're going to be looking down towards perhaps a $200 move towards the downside here from where we currently are at 19,400, with the potential for us finding our feet again in around about 19,200 or so. So we have a $50 range or $60 sort of range towards the top side in terms of, like, you know, if we get up there and we want to move beyond it, then, you know, that's where the inflection will be. And in terms of towards the downside, we're looking at a sort of $50 range as well. And then if you get down there, then we could be going for that $200 move. Right, cool, nice one. That's what we've got in the 15-minute time frame right now with regards to the chart. And what a difference a high makes as well, by the way, just coming in here and showing you that we didn't actually manage to make that higher high. Had we done so, it would probably have been bearishly divergent anyway. That's a saving grace. Counterintuitive point here does give you the chance to take out this previous high. This would be putting in a higher low overall, and then it'd be quite nice. If we do see a movement up above 19,470, then the expectation would be that you'd go up and try and push above the 19,530 area, giving you a double top here with a base in below that's come down and retested in here. So in terms of your psychology, in terms of the retracement against the movement upwards after having put in a bigger term time frame, you know, the bigger term time frame lows in here on the way up, on this crappy thing that we've got here. Overall, then what you'd be saying is that that's a half staff bear bull flag. So just take out the drawing tools. This is the 15-minute. This is the low term time frame and technical analysis. Now, brush. If this is your flag pole, and this is your flag, and you're talking about a movement off the back of this, which is somewhat commensurate, then it could take you up towards our 21,000 or 21,500 target. You know, that would be scary in a sense for shorters, but we already know about this green line in this point here, and of course that's where, of course, the FOMO kicks in at again as well. So that would be your clear area to look to, but these things are less likely ones to work out the way. This is a really bad looking one. If you're looking for a flag, and generally speaking, you'd expect this to be to play out negatively if you're going to be looking at it from that point of view. So so I'm not enthusiastic about that. It's a rubbish looking one. But in terms of these 15-minute time frames, we could draw it back in again with the sort of cup with handle idea that we're talking about. there. If we actually come up towards our making that triple peak in there, the 19,530, perhaps we actually gives us the momentum to go up there and get to those FOMO zones. Doesn't look like it at the minute. Doesn't look like it at the minute, right? But you could make a case for it being positive. Of course you could. Thoughts on BTC short term? We're breaking out now. I think that's answered your question for you, matey, just there in terms of my analysis. Jake, good to have you here, Jake. By the way, Jake at the Vantage Point. You certainly arrived at the Vantage Point by tuning into the Rocky Outcrop channel. Oh, pat myself on the back for that one. Cheers. Yeah. Thanks very much for joining us. Hope you hit the like button. Matthew Rodriguez, good to have you here, and it's nice to see your comment. Truly appreciate your TA work, especially in a space filled with false narratives, outlandish price predictions based purely on fundamentals, FUD, FOMO. I've learned a lot. Thanks. Cheers, mate. Cheers to you. Thanks so much for that. That's such a lovely comment. Thank you so much, Matthew. I really do appreciate it. Really, really do. And just so everybody else doesn't feel left out, I also really appreciate your comments too. But anyway, what we have here, great analysis. Thoughts on FCA derivative ban? Rough. Yeah. My initial thoughts on anything like that, they come across as rough, right? But it's also like it's so difficult to police, right? For one, this is by the way, for people who are wondering, the FCA is a Financial Conduct Authority. It's the UK thing, right? And what's happened recently in the UK is there's been new legislation that's come out to say that there's going to be a ban on derivative trading of crypto products. So things like futures would be banned, right? And stuff like that. Bit of a problem, okay? And they say that there's no need for futures, and I've kind of disputed this as well. I think the language of the document that they put forward is very open for contest should anybody want to do that. But when we think about it, we don't really use UK exchanges to really operate, and it kind of puts us in a similar sort of position to what the Americans are in as well. And there are other options as well. There are other choices out there. I mean, it's not going to be the end to leverage trading. It's not going to be the end to most of the trading. It doesn't really affect the DeFi space necessarily. It's a hashed together, poorly thought out document. So I think that says more than anything really about it. But as well, it's an attempt, if you like, to address the legislative needs of a modern economy. Okay, so we do need to have a modern economy, and that requires this framework, this legislation, and the regulation. Now, if that starts off with mishits in terms of banning derivative products, then fair enough. I just don't see not fair enough, sorry, but within the expectations that we've come to accept. You know, let's call the ombudsman on that one, and we'll write in and we'll complain and we'll stand in a queue, and within the next sort of 4 years to 12, we'll get it sorted in a nice British fashion. Nice cup of tea with that one for you, mate, if you want, of course. So we'll sort it out over time. But that's what we expect, I suppose, with these faux pas. And in the meantime, it's just going to open up demand in other avenues for other products, and it does create a need, you know, because things like options, right, you know, a lot of the options ideas existed since before they became popular. The massive driver for popularity of options trading in America comes down to the ban on contracts for difference. Okay, so they banned contracts for difference in America back in a couple of decades ago now, and that's what led to the options. So while you're in the UK and you're asking me what do you think about the FCA, yada yada, as a trader you might not actually really dip into the options world quite so much because you don't have that American mentality. That's one of the reasons why, and it's kind of like we put up these obstacles and then new things kind of come out from it, and if there's a space where innovation is going to enable that to happen, it's going to be the crypto one. Now, I would dispute it as well. My thoughts on it at the time were, this is a bit odd, the basis that they're making, the rationale hasn't been constructed by somebody who fully understands either really trading or crypto. So I felt like it's a bit, I don't know, I don't know what prompted it. I do know that they actually agreed to do some work on this, and that they would ban them in it by a certain time if they hadn't come up with ideas about understanding it. And what it kind of strikes me is a sort of failure of imagination and a failure of experience and a failure of trust and understanding on behalf of the FCA, where they've decided, well, like essentially when they discussed in 2018, what will we do in 2020? if we haven't come to a decision about things, well, we'll just ban them all outright. Okay, that's the safest option. And then that's what ended up happening. And then the announcement was written by somebody who doesn't understand it. And essentially it's because they come to the conclusion that there's no need within the crypto space to trade futures for retail markets. And the obvious initial response to that is, what need is there within the retail space to trade future oil contracts, or what need is there for me to have any derivatives for any sort of commodity? Am I actually going to take shipment of 55,000 oranges in June 2021? Am I actually going to do that or not? Is there a need for me as a retail trader to be able to buy 55,000 barrels of oil for delivery in a year? Is there a need for that? No, there isn't. And so it doesn't make any sense. They've not thought it through, and that's my thoughts on it. Sorry if I went on a bit much there, but you asked me what my thoughts were, and I kind of just decided to give you all of them. Sorry. You should have said thoughts, no more than 3. Can I have 3 of your thoughts on, please? Not all of them. Who else is in the chat here that I've not given a shout out to, by the way? Because I want to make sure that people get a shout out. And let me know if you like that Elrond ELEGLD chat, Steve, or if you're just going to come back in and watch this video after the fact, not live, then let me know in the comments down below what you thought of that. It's interesting. I wouldn't FOMO into it, blah blah blah. And as you can see, we're having this in this 15-minute candle that's up behind us on the charts here, that we're having that sort of little bit of thought. There's a little bit of thoughts going in here. That's a really bad way of saying that. I'm just trying to say that the prices are bouncing around about this area, unable to quite get into the bath yet. Bath temperature obviously quite high, dipping our foot in there, put it in, took it back out, but we're standing here thinking, is that just because my foot has got such thin skin on it and I really, by the time I got my knees in there, I'd be all hunky-dory, or am I actually going to risk 3rd-degree burns if I plunge myself right in there? So we're standing above the bath, dipping our foot in and out at the minute, and that's what I wanted to get at. And that's what I meant when I said it doesn't look good at the minute. Okay, what would it take for it to look good on this tiny little time frame? Not an awful lot, I think was the point that I was also making. And it does come into just a essentially the difference between $40. So 6% of the day's range is what's going to make the difference over the next period of the next couple of hours, I think, currently. Really. Cool, nice one. Let me just see. If XRP puts in a bounce at 36 cents, it will look like a massive bullish harmonic and could perhaps go to $1. Dollar, ice cold water for $1. Ice cold water for $1. If you're in the States and you have to live with that song being sung at you every time you walk down the street, let me know. Give me a shout out. Went to Las Vegas one time, and it wasn't much of a surprise to hear some guy standing there with a big stack of coolers, or whatever you call them, those ice box things, full of bottles of water and ice that they bought at the 7-Eleven or whatever, singing ice cold dollar for $1, having heard the song previously in Hollywood and San Diego and blooming New York and everywhere. Right, so but you don't hear it here because it's always cold and raining, and water is free everywhere in Scotland. Forgot to turn the oven on for that turkey. Oh yeah, we already talked about all that sort of stuff. That's cool. Seeing that the chat is coming to a sort of natural, nice sort of slowing down here towards the end of the show. That's nice. Gives me a signal that I can probably head off fairly soon. We have got half an hour before the daily close comes in. I am tempted to kind of just chill out with you all and watch the daily close happen, because I've not done that ever on a live stream before, so we could do that if you're interested. That might be cool. If you're watching right now and you haven't hit the like button, do that, by the way, please. I would appreciate it. Jake Vantage Point says, much appreciated. Let's hope they come around. Yeah, let's hope they come around as well. I reckon they probably will. It's just for me, what it struck me really was as that they decided a couple of years ago that they had to make a decision about something, because a couple of years ago they decided that they decided that they had to say to somebody that they decide, it's like the Trump with the election thing. The FCA knew this was coming up as an issue from back in like 2014 or something, and then they were like in 2015 they were like, we're going to need to make a decision about this at some point. So then they got to like 2018, they were like, we haven't made a decision, but what we can tell you is that we've made a decision to make a decision in the next couple of years. And then a couple of years went around, they're like, we still haven't made a decision on this. And they're like, well, we already made that other decision. And that's the process of events that we're going through. Stick in a bunch of jargon and get it written by somebody who's, you know, an intern in there, fling it up the pile, get it signed off by people, print it out on your website, come back, talk about it after your boss has had a couple of different governmental meetings. Let's not get too carried away. And that's basically what we're looking at with that one. They'll be banning CFDs everywhere eventually. It's all built on a broker scam. That's definitely that. Advert news. K-Doc, you want advert news? Yeah, because I couldn't deliver before with the advert. But I have this video campaign thing. Te advert. So we can see in here. Now, here's the analytics. What do we want to look at first? Because I'm obviously quite inexperienced at this, but I did get the tab up for it. Thanks for the reminder. What we see, I think the ad might have run its course, you know, because I decided to put it on for a few days. We already know from yesterday's video that it's resulted in -1 subscriber. The future's in advertising. What we see is that I was slightly wrong in my assertion as well yesterday, looking at the video stats, that it was 94% average view. I guess that it's of the people that viewed it, 94% of them viewed the whole thing. Of all the people who got a chance to see it, 51.56% of them chose to watch it. So we're seeing that, you know, there's only a very, 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 very small percentage of people chose to watch the advert to the point that they actually registered as that they chose to watch it or whatever, but they didn't actually watch the whole thing. So we're talking like 3% of people that had the chance to watch it decided to watch some and then moved away, which I think is okay in terms of like likability sense of things or whatever. That didn't get like, you know, that I think that's okay or whatever. Spent £40 on this thing. So that's what do you want to call that? $50 or so I spent on this ad. It got 1.21 thousand views. And the average cost per view was 3p. There we go. That's quite cool. So it wasn't like super expensive for the ad, it turns out in the end, which is kind of cool. But cost per view 3p, which means my cost per 1,000 views actually was 30 quid. So actually, in terms of like comparing that to my own stats in terms of what I get paid in terms of ads, the cost per 1,000 views for people to advertise my videos is generally less than 15 quid. You know, I'm talking $12 actually is probably maybe about what it is. Somewhere between $9 and $12 per 1,000 views is what it costs to advertise. And there's me paying 30 quid per 1,000 views, and maybe that actually adds up to being about 15 quid per impression. Maybe it's per impressions or whatever. Maybe that's about right. Definitely paying somewhat over the odds though, I think, for that ad compared to the ones who, in terms of like, and I'm assuming that I'm in the niche that I'm trying to target with these exact same sort of customer base. So I suppose I paid slightly over the odds for my views, but there you go. And that's maybe just what you do. I don't know. Maybe it makes it. Maybe if you're used to this sort of thing with a bigger budget, maybe it's only whenever you have the big budgets that you see the lower. I don't know. I really don't know. Don't really care. What else can we find out about this thing? Analytics, right? There's more to this than the overview. Audiences. I don't know, mate. K-Doc, tell me, kill it in sword next time. That's high. I click ads away as fast as I can. Yeah, that's what I was thinking. That's what biggest positive I was thinking is that's a lot of people that chose that stuck around past the point at which you're like hammering the button. You're tapping on the thing, and it says you can skip it in 5, 4, 3, and by the time it's actually got down to when you can skip it, you've hit it 10 times already. That's what I think. Rocky, are you a hodler or trading only? There's little bits of me that hodl, little bits just, you know, and that I'm a trading guy only, really, if you want to be perfectly sort of clear about things. And I think that is one of the main reasons why I'm actually really interested in making YouTube videos and talking to people and all the rest of it, because that's like where all my experience really is with regards to. Now, I've dabbled in things like DeFi, I've dabbled in things like mining, I've dabbled in things, If you were to take all the time I've spent on any of these individual fields and compare it to how much time I've spent and money and everything else, so all the rest of it in terms of trade compared to trading, then you're going to look at a sort of 99% 1% split. So I'm a trading guy, if that's what you want to say, but I do like the idea of being able to hodl. You know, I do like the idea of buying something that's mega cheap and selling it when it's mega expensive and all the rest of it without any sort of stress in between, you know, where you kind of have an account and you come back to it in a year or two and you're like, oh, look at this, there's $1 million in here that I didn't realize I even had. You know, that whole finding a fiver in your pocket when you go to wash your trousers experience, but with regards to a trade and investment on a bigger scale. But really, you know, I can't operate along those lines. I can't look at charts. I can't look at a chart, you know, not that idea I put out. I can't look at a chart over here, you know, back in February, looking at this and saying there's a potential low, and then coming in here at March and saying that this was the low, and then buying it here and seeing it up at these points, and then of course taking some profit, and then when it went up again, you know, buying it there and then taking some profit, and then went up here and buying it again, taking some profit and all that sort of stuff. I can't help but operate like that after having done this for so long, because it just would seem crazy risky to not do that. Okay, so and then from the main sort of the main driver for people who are talking about this is like they talk about risks, you know, and a lot of people say, oh, I don't believe day traders could even make any money and all this sort of stuff. And it's like, it's funny obviously, because they're talking about the risk of, you know, compared to just holding on to something and never buying in or out. Whereas the longer you're at this, then that whole thing just flips its head completely. And I can't look at something and think that it would have been a wise decision to have bought it down here in December at $3,000 and then waited, and all you'd have done in the meantime was buy more when it got to $4,000, and you didn't do anything in between, even after it had gone up 300% and back down 80% and up 300% down 80%. You know, I can't. So that's my thing. Yeah, and I short often, and I hedge against my own positions, and I do various other things that are like beyond the scope of what you would talk about in one of these episodes anyway with people, you know, really, and that. But I do a variety of things that just don't come into the mindset of somebody who's a hodler. But I can romanticize the idea. You know, I can romanticize it. I can think about how it would be fun to do this and to buy some crap coin which is only listed on HitBTC or whatever, and then see one day it gets listed on KuCoin, and then it gets listed on Binance, and then it gets listed on Coinbase, and you've been there from the start and all this sort of jazz. Yeah, I love the idea of that. Frankly, I don't do it though. Yeah, cool. How long have we got left until the daily close? 20 minutes. Do I think I'll see myself sticking around here? I don't know. How about I hide these Bollinger Bands since they're so loud? Bollinger Bands. See, by the way, also just in answer to your question, Jake, if you're thinking about, like, you know, this is what we're talking about on Friday, and I was talking about how there could be some weekend relief coming in here, which is, you know, for people who were long in it and then the prices moved against them, and I was saying there's this concept of that weekend relief that I talk about. I don't know if anybody else does, and I was looking at the bull trend positives here on the Friday and whatever else, and that you know, when the prices had gone down to here and then they moved up to where we are now, and we're looking at the difference between what, $2,000, almost $1,500 in price and whatever else. Like, I can't be on the internet on Friday telling everybody all this information and then just conducting myself as a hodler. It just doesn't work. Thanks for answering. Subbed. Catch you again. Cheers, Jake. Thanks so much for that. I hope your name came up. It doesn't actually. It seems that the last sub there is Jerome Bossy. That's cool. That's a cool name. there on the thingy. Your subs are private on YouTube, obviously, or whatever. That's cool. Nice one. Thanks so much for tuning in. Really do appreciate it. And sleep well. Good night. And I'm assuming that, of course, you're in the UK. It could be Gibraltar, in which case it's just even later. So it's coming up to midnight, and it's a school night. So sleep well, my buddy. Sweet dreams and all that good stuff. We are looking at this in terms of 24-hour time frame just here as we're coming towards the end of the show, and of course towards the end of the day, and the close is staring us in the face. 19 minutes and 44 seconds, 43, 42, 41 seconds away from where we are right now, and we're asking questions about how we're performing with regards to our previous price action. And as you can see here, we're at right now at the equal point of where we saw the prices close on the 3rd and 4th of December over there. And then of course we're slightly above where the prices were on the 6th and 7th, but we're below the highs that we had on the 30th November, and then of course the 1st of December. And over there on the CME charts, to kind of make this a bit clearer, I suppose, since there's less candles, that means that we're lower, really. Well, actually, no, they say is this 6th and 7th? We're the 6th and 7th here. Yeah, okay. We're lower than the closes that we'd had. This is a slightly different structure, isn't it? These high was on the 1st of December. What are we talking? CMEs high up here on the 31st, the thingy, not on the 1st of December. So the CME high was on my birthday on the 30th. The spot price high. Am I on the daily chart, the 24-hour chart? Maybe I need to be on the daily chart to see this line up properly. What are we talking here? Yeah, that's better. So it's daily, little dynamic that exists between the 24 and the daily. Now, I'm not sure if this was always the case on TradingView, but it certainly is these days. If you're curious, by the way, so look between 24 and daily if you're ever seeing something that doesn't quite add up, like I was just doing there now. So we're below those highs over there, still not managing to do anything special, still not managing to get back up above this point over here. So it's not been that great a day in terms of the CMEs, as you can see here. Obviously the CME day is just opened up there, so this is tomorrow essentially in the CME land. Yeah, that's the 16th of December there. So yesterday's close was there. Yeah, so that doesn't look fantastic, does it? Obviously this would look a hell of a lot better if it was just up where our wick has been. So for the next 20 minutes, if we see the prices moving up to even just, $450 or $19,500, $19,450, something like that, then we'd be able to look back and say, look, we're starting to move past these points. The only thing that stands between us and clear skies is one close. That's the only thing that stands between us, is the close that we had on the 30th of November. Otherwise, we're looking at potential for the next close to be higher, but we're not there yet, and that's not fantastic. When it could be, and what would it take? Not very much price action. So I'm not enthused, I'm not blown away by what I'm seeing here on the chart, essentially, really is all I'm saying there, which is fine. It's dead easy for me to say this, by the way, just as well to, like we talked about the price action back there on Friday. We came down to this orange line, then we came up towards to this blue line, which I was calling a profit taking line, moving past this other sort of profit taking line along the way or whatever. We've done all of this. Oh, well, yeah, so you can see actually, yes, we came up here past this one, and that puts me in this position now where I don't particularly care too much, don't need to, because trading is this. It isn't pushing here for an extra $50. That risk that you have between where the price line is right now and anything up above into this wick is so much bigger than the risk that existed between here at 18,000 all the way up to 19,200. That $1,200 was less risky than this $50 is here. That's trading. The operation of a trader is essentially to buy and sell risk. Okay, so I bought risk here, you could say, and I sold risk here, and I sold it to somebody else who's willing to take that bag and run up here and say, oh, I'm going to get there, I'm going to take it, and I'm going to get to the next level. And it's like, all power to you. Good luck with that. I'm totally happy to see it happen. Or whatever. Anyway, we're now 15 minutes away. Not sure I'm going to be able to keep this drum roll going the whole way up towards the end, but we can say a couple of clear things. We've not managed to make it above that zone. In terms of the Bollinger Bands, plenty of space up above. When we did put in our previous highs, of course, that was ticking off the top, and that was all part and parcel of having had traced it towards the top side. Looking at this trend, looking back to the way we traced it all the way up from these October, Tracy, moved away a wee bit here, Tracy, moved away, big movement back down, tested the 20 moving average, the basis line, hadn't done that the whole way up. Subsequent to testing this, we came back up and touched the top line of the Bollinger Band, but then moved away again. And what we're doing in here at the minute is putting in currently, not a higher high even than any of our other ones so far. And that, is not super positive, which means you do have opportunities here to trade this towards the downside if you were looking to. And of course, easy to manage risk, because pushing past this zone in terms of that risk right now, the biggest risk being in this next sort of $100 zone, if you want to call it that. That's where your biggest risk is going to exist. It kicks back in again as being much less risky than you're up there at sort of 19,600 and above. So again, less risky there. Obviously still with the keen eye on the fact that it's much worse than this zone was here, much worse risk level there. But you could maybe look towards these zones and ask about the structure of things and manage things kind of going forwards. I don't have a particular plan in place, so I'm not going to kind of even intimate what you would do necessarily in and around that zone right now. I'd have to think about that some other time. But we're on the way up here now. There's a couple of other distinctions I suppose we could point out, is that over in this period here, we were putting in a triangle, as you can quite clearly see in this zone, and then that got a resolution towards the downside, which was the full measured move. It didn't come past our lows and then came up towards this side here, and now we're only really at this point here within that triangle structure. We don't have a current pattern on the go at the minute, unless you look down towards the small term time frames and you see that really crap half staff thing that I was talking about. Was that on this chart or was that on the other one? Whatever. Yeah, this half staff thing isn't going to work for anybody. It's a bad idea. So what I'd rather see is something else. What do we have as well? Do we have anything like I am just, by the way, real curious, I am just literally filling out the time between here and the daily close. Suppose your Rocky Outcrop on there. Oh, I'm looking in the wrong place. The chat hasn't been on for ages. I'm so sorry, by the way. I've not had the chat on screen for ages. And I meant to. I just kept looking over, thinking it was quiet. I even said it was chilling out towards the end there. Oh, completely wrong about that. Nice to see you, Allium. It's good to have you here, buddy. Send me a message in the back, right? We've already got to the point now where we've moved way beyond all the chat you had there. Tell me what it was that you were looking at, particularly in the, back then in October, or whatever it was you were posting on the Discord with your secret sauce. If your secret sauce is still super secret, I understand, but we're past that now. So I just wonder what it was that you were looking at yourself. Obviously I kind of publicized all the things I was looking at on YouTube for everybody else to see. You can keep it, I'll keep it private if you want. Rocky, are you a trader hodler? Yeah, answered that. Thanks for answering, that's cool. K-Doc, big smiley face. He only huddles his schmeckle. Rocky, was the last day you weren't in a when was the last day you weren't in a leveraged trade? Whoa, when was the last day I wasn't in a leveraged trade? February, in this period between whenever I relinquished my Ethereum, Bitcoin, everything else were moving down at the time. I relinquished my positions then it went down to the lows on Friday the 13th of March. Somewhere between Valentine's Day and the 13th of March, there was a period where I didn't have a leverage trade on. That was the last time I didn't have one. Yeah. Zup Pepsi, Zup Rock, all well? Yeah, all's well, Allium. It's good to have you here, by the way. It's nice to have the king of Allium back in again. Navaneathan, good to see you. Hey Alu, hey Tradesbon, hey Doc, hey all. Yeah, good to have you here, Navaneathan. Nice to see you again. Hi Nav, says Doc. Look at that. Look at the camaraderie, the friendliness. BTC USD spot chart, says Allium. Indeed, this is the BTC USD spot chart. Yo, and we've got the up behind us, we've got the 1 hour time frame. As you can see, 10 minutes 59 seconds left on this one. Let's jump over to the 15-minute time frame and see how things really shaped up with regards to that potential for a higher low. Whoa, look at that, we had a higher low in here. Now, of course, you look at this is a downward trend, right? You've got your low here, your high here. Is this a higher low, right? And is this the potential for a turnaround on this trend? 15-minute time frame. Let's just treat it like it's the bigger time frames, because it is all the same. or not. Right, let's have a wee look at things. What we're doing here in terms of this negative trend here, very much in place. Haven't got a crossover yet. This doesn't look like it's reversed or anything yet either. Either or. Cool. So that's looking negative, so it doesn't look like it's in line to flip that right now. This just pushing away from the neutral line, can't get up above it at the close on midnight. Obviously this is the last 15-minute candle that we've got before the end of the day, so you'd want, you know, are we closing the day on positivity or not is what I'm looking at right now in this particular, you know, with regards to this particular time frame right now in this whatever. So neutral line there below the moving average and all the rest of it. What are we talking about here? Lower low on that one during this period, but no, that's not. That's just, see, this looks like, see how on the MACD this doesn't look like it really is a bottom. You know, like, you know, that there's, you know, not very much of a movement in between, where it's quite easy to kind of say, well, there must have been a high in here and there must have been a bottom in here and there must have been a high in here, right? There must have been, right? Let me look at it and we go high, low, high, or whatever, okay? And then you come in like that type of idea. Is that right? Is that where we're looking here? Oh no, that's even further back. So you're looking in this region where there was a high. So like when you're looking at the MACD, it's this region where there was a high. So it's this, go away. It's this region where there was a sort of high on the MACD. And then we had a low on the MACD in and around about the 15th of December at 5:30. So in and around about this region was a low. Anyway, as in terms of like regions and whatever else, where this is just a region where there's a low as opposed to being a higher low or whatever. That's too rich, you know. And then if we did take out this zone here, then I wouldn't necessarily even look at this and say low, high, higher, low, higher, high necessarily. Even at that point, it's still pretty rubbish. If it was the daily time frames though, I suppose it probably would be. So that's kind of going to have to be fair on that one. Still looking at it's the same zone that we're talking about with the run into the last 8 minutes here before the daily close. If we see the prices remain below the 450, 460, 470 area, then it's not. It could have been better. It could have been better, right? If we you know, continue to do what we're doing now and pushing up that we have been over the last 10 minutes or so, as you can see on this time frame, and go on and do that, then cool, that's good. That's all that needs to happen, right? That's kind of what we're saying. If it doesn't happen, then it didn't do all that it needed to do, right? And if it doesn't do all it needed to do, well then that's not very good. It's not very good. Could be better, and this doesn't look very great at that point. It doesn't take an awful lot to turn this around, is what we've been saying for the last ages. It doesn't take an awful lot to change that narrative to being like, oh yeah, things are good. But if it would be so kind as to obligingly actually do that, even though it doesn't take a lot, that would be nice. Otherwise, why isn't it? Because on the 24-hour time frame, when we zoom back in and we line up these things, oh, it is doing it just now. Oh, of course we're up. Is it doing it just now? Yeah, it is doing it just now. I could have zoomed in there earlier on, but we're just here. We're just putting in this little bit higher than this area. Just doing it. It's just doing it. This high to this high. This high to this high, this high to this high, this high to this high. Now I'm not comparing, I like to remind folk again in the last 6 minutes that what we're doing here is we're putting in a period of not putting in lower lows and not putting in higher highs. It's essentially a consolidation phase, and that looking for divergences during this phase is somewhat not ideal. It might be better to look for hidden ones during these phases than it is to look for regular ones in a sense and whatever else. But there's whatever we can see here that we've got divergence though anyway. If you're looking, and as well, even worse than that is that this isn't like the high and this is, you know, whatever, right? But if we come in here and close where we are just now, right, in 6 minutes, if it's at 19,030 bucks or higher, then you could say potentially that there's a sort of bearish divergence on the go between these 2 points here and these 2 points here and these 2 points here. Okay, you could say that, but whatever. Asia will be getting up soon. Yeah, gotta love that. They get up in about 3 hours though, don't they? Korea, China, all that stuff. It's about 3 a.m. I think of it with regards to when they get up. That might not be when they get up. That might be when they start room. I don't know. Is Rocky staying up till 5 a.m. now? No. I'm not staying up till 5 a.m. Not tonight. No thanks. I did actually have the. I did actually wake up quite a lot last night. I went to bed fairly late last night, and then I woke up with the slightest noise. Not ridiculously large noises, so I could have been asleep and slept through a siren going by outside, but as soon as my phone went on silent with a message or like WhatsApp backup paused or whatever, I was like, what's that? And I woke up. Allium, I'll hit you up on my way home. Regarding the 50-minute chart, I personally like to use the 34 and 10 moving average. Pretty spot on. I have like the exponential moving averages here, the 8 period. Let's just stick them on. I'm not going to go fiddling around with different moving average choices just now in the last 4 minutes and 25 seconds before the daily close, and then I say cheerio and head off. But that's cool. I'll look forward to your message, by the way, Allium. That'll be really interesting. I'm for like curiosity's sake and everything else. Be great, and I'll keep all of your proprietary info, lovely and proprietary and all secret and all the rest of it. Everybody else in the chat will be thinking, what is this? I need in on it. And by the way, you don't really need in on secret informations like that. You can just do the sort of activity that we do here on a daily basis anyhow, and you're all right. You can make some decent decisions. All right, it'll be okay. I'm making a really big deal out of something that isn't really necessarily worth making a big deal out of. You know, if we were up here and it was all-time highs and everything else, then it'd be like, wow, we're doing something of note for anybody that's just tuning in and kind of wondering what's going on. But just like checking it out, just seeing how we end up just with regards to this here, and intimating at the idea of the sort of during consolidation trend move, where essentially if you're going to look at anything here, this is a downward trend at this point here, if you want to be like strict about things. So looking between these lows for divergences would have been what to do. You know, when we came in here at this point, yada yada, move towards the top side, this is blah blah, breakout, phase of markets, yada yada. The previous high is really over here, this is just another one. But we do want to be taking out these intermediate areas right along the way towards success. If we put in a high that's just in here over there, then compared to these 2 points here, we're slightly divergent, right? But on the way, let's just as well bear in mind that this is obviously moving down towards this point, and this is moving up towards this point. This is because this is during a downward trend, and this is because this is in this sort of small frame, you know, last 4 days upward trend area. And if we're going to call this an upward trend, then we would expect to see a higher low. And really overall what I want to see happening is kind of reference back to what Allium was saying there, is that I wouldn't be at all surprised to see the prices dropping down towards that 19k area, where we'll see the 8 period moving average floating around about here in 2 minutes and 20 seconds. And wouldn't be surprised to see us dropping down towards 19k and you know, burning some of this little bit of like lack of extreme momentum off in order to put in a higher high. If we actually did come down towards the median line of the Bollinger Bands there, the 20 period moving average, then we're looking at a retest of this downward trend channel area, and then of course breaking down past that comes into these key areas. Of course this lines up with the orange line at the minute, the orange line, and then the blue line is being our key areas. This down here where I put 2 of these in isn't really necessary to have 2 of these anymore. We're just going to hide one of them. We can see that there's the green line of the 236 Fibonacci moving average in there anyway, or Fibonacci retracement point. Hello MA, yeah, cool, I'll check out this. Hello, that's no good next to your street. Sounds like the fringe happening 24/7. Aye, it is. I need to get myself second. I just, like I say, I'm not bothered about it. I actually go, the hulls are good for slopes. Yes, I'll do that. Shall I do it in tomorrow's episode? I'll do it in tomorrow's episode, right? 1 minute and 13 seconds left here, and I'm trying to wrap things up. I'm not going to start talking about anything different. That's no good. I deliberately didn't read that word out earlier on when you put it in there. I wanted to kind of avoid it, but you caught me, Allium. You caught me, and you took me to task. Right. Here we are. Drum roll, please. Last minute incoming. And shall we look at this on the minute chart? Let's look at it on the minute chart for the crack. Okay, so this is our last minute of the day. And really what we were talking about was whether or not, and what it boils down to as well, look at that. From all the chat that we've had,
we've been saying that what we wanted to see happen for the day was at the end above this number, and obviously kind of resolved that in at around about the 429 area or whatever towards the end of that chat about it. As you can see in this last minute here, 22 seconds in, we're coming in here and we're incapable of doing so just now. On the 24-hour time frame, if I zoom back up a bit so you can see this, you can see that clearly puts us in here at a point where we're not, got 9 seconds left, so are we doing it or are we not? Bells outside are ringing. The bells outside are ringing. And I'm going to go to bed soon. But what we have here is, of course, failure to do that in terms of this movement. We moved down here, we came in at this area. So we failed on that front. Where did we end up on the 24-hour time frame? Of course, we're now way beyond that. Moving on up here, like, great, cool, but where did we finish in the day? Did we get in here? Yeah, we did. We managed to close in just above. We did manage to do it. The 1 minute chart looked a bit sketchy, but we did it actually. We did manage to close up there above that area on the 24-hour time frame. Of course, that was just $5 in it, really, in terms of where we ended off. So fan dabby dozy. We ended the day here right on. Actually, it was only $4 in it. Anyhow, if we see movements towards the downside thereafter, it would kind of be in line with what we've talked about. If we see movements towards the top side, then what it does is it takes away what we've talked about in terms of this crap divergence chat here, because it would just boil that off immediately, right? And we'd be looking towards the top side. Anyway, I've talked about all of the stuff on the run into this anyway. I've already explained it all. Do I need to do a summary at the end, or can I just kind of say cheerio to everybody? I wonder. We managed to close the day above $19,430, which we decided was going to be a fairly positive thing. We've managed to do it, but of course, if we see the prices withdraw from here, there could be the slight threat of looking at that and acknowledging perhaps a degree of divergence within an overall consolidation phase by taking a downward move and comparing it to an upward move and really breaking all sorts of rules there. But we could do that, and we could say then, of course, that decent areas to look out for down below coming at 19,250, movements down below there, and we're looking down towards 19,000. That is, of course, a key area for a variety of reasons. And then I think that it's fair enough to look down towards the mid 18,000 area, and of course, perhaps 18,700 or so, if we do go down towards 19,000, as the momentum could potentially carry us in, seeking out that higher low if we're going to turn things around from this point. Now, of course, I'd look at the way that things are developing along the way. Are we coming up here with a degree of momentum? No, we're not. The breakout from any sort of potential triangle feature is halted in terms of having had this higher high. Again, I suppose the chat for today is what a difference a high makes, like I said earlier on. If this was the case in terms of this not having been another high here, then we'd be looking at this and saying there's a clear ascending triangle here that we're currently testing at. And of course, if we move up above this zone and see any volume coming in over the next day or two, we could easily be looking up towards this sort of let's call it 21,500 zone. Okay, that's if we see volume coming in here as we go past this point. Unfortunately, actually, that doesn't really suit us. It's not really the case, and what we're seeing instead here is that there was this high and we moved towards the downside and then kind of broke out from this structure of a wedge or something like that towards the downside, and then moved up there afterwards, coming in and putting in an equal high. And we've not really resolved things quite yet. We could still be in an ascending triangle. If we are, then of course we haven't really done anything until we've gone past fake out territory and put in all-time highs and everything else. So you have to look up again, another $500 to really be confident about a move to catch that next $1,000 or $1,500. And I know that means you need to be patient, but that's kind of just the way it is. Now, of course, we have easier and sort of in terms of your patience running dry modes of thinking by moving back down below the sort of 19,300 area or so, or 19,222 if you want to sort of manage your risk at that point. Taking out our previous highs really again here, this one on the 7th of December will kind of be something in and of itself. In terms of the CME chart, of course, as well, we're looking at having put in a red day so far while all that fun and games is going on the close of the spot charts. And if we take out our previous lows in these areas, then we're just kind of going to look towards that gap, and we're going to be forced to. Our eyes will get automatically drawn there, and I think that will be the eyes of most of the traders that are trading in that arena would at the same time as well. So that means that you need to see follow through here, which means that we need to discount really overall the discussion that we're having with regards to the divergence. And instead, I think the key thing to look to in the next wee while is going to be volume coming in with any movements beyond or into this zone here in this liquidity area. And I suppose that's a good enough summary with regards to the Bitcoin prices for today. If we get into that zone, then that's where it's going to, that's your biggest risk zone for trades which are not going to be managed, or indeed your lowest risk zone for trades which you do manage. If you're thinking along these sorts of lines, for instance, where you're looking for a movement up towards these other zones, maybe that's when you start to think about getting into one. Or indeed, if you were to be looking at it from the point of view of shorting it, then maybe, you know, you're looking in and around these zones and thinking that you can manage your risk for this sort of a move and get an easy 6-to-1, 5-to-1 profit if you were to come down and retest the 236 or simply put in a higher low regarding any of this price movement. And that's what it really boils down to trade this zone right now. Everything else is just kind of garlands and spices and flavorings and seasoning on top of chat for kind of that hodler mentality. Really, the traders are kind of going to be looking at it this way probably. Good to see you, by the way. Good night, K-Doc. Bye everybody, says K-Doc, so good night. And good night. What time is it roughly? It's about 8 p.m. or so in Texas where you are, K-King. Good to have you here, buddy. Thanks so much for joining in. 7 p.m. maybe, I don't know. Maybe later, maybe earlier, maybe it's like 4, I don't know, I'm just guessing at this stage. But I am also going to tune out. It's nice to have you here, buddy. If you flick back through the video, you'll see various times where we talked about different stuff, and it was great and everybody loved it. In terms of looking at other Simao, good to have you here, by the way. It's nice to have you in the Discord, nice to have you on an episode. Thank you so much, my Portuguese friend. By the way, yeah, what was I going to say there? I've forgotten now. I'm just tuning out now. Thanks so much, K King. Oh, the only coin that we talked about that wasn't like one of the 4 major ones, only 2. We talked about Ripple a little bit, not much, but a little bit, as a way of drawing a contrast between the Bitcoin pricing and the Ethereum pricing, and this whole context discussion that I had today of what a difference a high makes. So it's kind of the chat that I used throughout the different bits of the episode today. So we talked about that, but then we also looked at Elrond, and that was the one coin that we looked at really in any sort of depth outside of the 4 major ones I look at. So that's that EGLD USDT pairing. That Yeti coin I told you about, the supply is now 6 million. 6 million. 6 million? 6 million has gone up. It was like 30,000, right? It's now 6 million. Yeah, that number's changed. Peace, lads. Thanks, Rocky, says Navanethan. Yeah, you're welcome, Navanethan. Obrigado, by the way, to Simao for joining up. Obrigado, is that right? Is it obrigado, or obligado? Maybe obrigado. I'm not really sure. Anyway, I've watched enough Brazilian TV to know that that's a word that Portuguese people use. Matthew Rodriguez says, in a future video, would you be able to go over fib retracements, fib extensions, and how to chart them? Absolutely, my friend, I would indeed for you. And at this moment here, when I go to tune out from the channel, if you just stick with me for an extra couple of minutes, I'll introduce you to a couple of ideas when it comes to Fibonacci videos that you might be interested in watching. So I want to just give a shout out to my good friend, Trade Spotting here, who is in the chat. You'll see him up above. Am I typing his name in wrong? No, I'm not. There he is. There's his cute little face. And he has a video right here in his videos. Fibonacci's fib extensions, how to use them, all that stuff explained exactly what you were looking for. So if you don't mind, I'll just copy and paste this link in for you. Here you go, buddy. There's a decent link for, yeah, there you go. And if I go back and go to my channel, how am I going to search on my channel? I think in my education playlist, I think I have something about Fibonacci as well. Let me just check the playlist here. Importance of price action is important very chart, Ichimoku, massive charts, DMI, look around the market, like fork, shift for regular pitchforks, breakouts, hidden divergence, understanding the hash ribbon, Bollinger Bands, TA, gaps, head and shoulders. Yeah, it looks like I don't have a Fibonacci video in my retracement in my education playlist, so you can check out other videos that are in there if you like. It did say when it was introduced 30k. It did. That's what you said. That's what we were talking about at the time. So I guess they forgot to, they got their maths wrong. Right, cool, excellent. Thanks so much to everybody for tuning in. Really do appreciate it. I'm going to just stick up the end screen thing where I tell people, well, that'll be back tomorrow, and I get the time wrong by about 2 hours. But I'll tell it anyway. Here we are. It says it there. Next stream Wednesday at 7 p.m. UK time. Now I am actually going to try and get here by 7 p.m. UK time. I don't really want to be doing a stream where I'm closing it out the day. As you can see, current prices down there at 19,401. I think if we dive back down to the 50-minute time frame, just as we kind of zoom out of the day here, you can see that this weakness that I was talking about persists here, so that's the story. But like I've been saying for so long, what's it really going to take to transform the picture of this chart? Well, it's going to take not much of a move. You're talking like $50 and all the rest of it. In terms of Ethereum, Bitcoin, we're down here at an inflection point for us as well, in terms of this smaller term time frame. In terms of Ethereum versus the dollar, we've done the same thing, but we actually took out those lows during this 15-minute candle, since the turn of the hour. So we've actually taken that out. So we've got that negativity kind of showing its face there, and this is what I was looking for, and I want to see if this will actually develop or not. There's a good chance that it will, in which case that second suggested trade would be a good idea for me, not for you, because I'm not a financial advisor. I would never tell you what to do with your money. But as we see this poking its head outside the Bollinger Bands, obviously it's going to have to hold its horses just a little bit. Let's see if you can trace this one to the downside, buddy. Don't get too enthusiastic, or else you'll bounce back up again. Looking over here in terms of the end of the day story for the Tezos pairing, same as well with with Ethereum. So we're seeing weakness there in the markets in general as a whole. Let's look over towards Link again. Today's not getting off. It's getting out of bed on the wrong side of the day so far. Of course, we can expect a decent enough movement back up here, 10 cents there. So there's like a 1% on the table for people who are looking to sort of trade and scalp these things. But of course, we're going to have to say if this continues throughout the day, then the day is a negative day. And I might as well just dive in with XRP USD as well before going, since I talked about that one during the episode, and Elrond. That's the same story over there. Of course, this one just looks like it's continuing its negative trend. Yes, there's the divergence here, so we could expect to see something to turn around. But if you're going to trade with the trend, which is your friend, that's towards the downside. Screwing all, zooming these charts back out the way, you can see that this has obviously been the case for quite some time now. And various instances along the way, we've had bullish divergence. For instance, between these two lows over here, what did we see? We actually saw us taking out the high of the in-between times. So we could see, Ripple going back up the way, but at the current stats, it's unlikely to be stretching up there above 50 cents in the next day or two, going down towards the downside. We could be looking down towards those targets we've had in mind recently with regards to, say, for instance, 36 cents. I'm going to have to type this in again if we keep on getting it wrong. Elrond Gold EGLD, that's the one I'm looking for, but want it versus the dollar. So EGLD USDT, we'll go over here. It's had a more positive end to the day than the other ones that we're looking at. Continued to do its upward movement, tracing this up the way. This has been more bullish. What can I say with this one? Staying above this staying in this bullish stance is going to be very, very good for it. It's got very, very bearish divergence on this. So I'm expecting to get decent buyback-ins at some point along the way, and it's going to represent a significant percentage move. However, of course, if you're looking at this short term, you could be looking for more upside, but a very, 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 very scary looking in terms of like actually holding on in any position past any negative points here. So I think I said something like I would maybe long this when we were in the show earlier on at but then it'd stop out at 23. So you can see that if I did that imaginary position, now of course it's in it's in profit currently, but I'd be looking at this thinking, oh, you know, maybe I'd ditch it. But then again, you know, as well as clearly it's you know, it's performing the way we wanted to. It's in profit at the minute, all that good stuff. Right, cool. So I've done everything. Jumping back over there. Nice to see you guys chatting there, TraceBon and K King. Well, that was short and sweet. I will catch you all next live stream. Got a long drive the next 3 days, all night driving though. Later, Rocky. Put on the tunes. I hope you enjoy them. Tell me what is the tune of your drive throughout the night, if there's a tune that really sets you on a good mood for your drive. Here's a suggested tune for you just before you go. Then just before we go, the is of course Chris Ray's fantastic rendition of The Road to Hell from 1989. That might set you off on a good footing for your drive. Then again, it might not, so it's up to you if you want to listen to it or not. But if you're looking for a song suggestion, I hope you like that one with his fantastic skills on the guitar and his iconic voice. Okay, cheers very much to everybody. I'm tuning out now, and I really do appreciate you tuning in for today's show. I'll see you tomorrow, hopefully around about 7 p.m. UK time, but I've been pretty bad with that so far, so just keep your notification bell hit, subscribe and all that sort of stuff, so that you make sure that you're notified. And of course, if you join the Discord, you'll always get a post from me before going live. At least, you know, tends to be at least 5 minutes, but you know, an hour or half an hour, whatever, before going live, I'll tell everybody, so you can join the Discord if you're looking for that info. Catch you later, y'all. I'll just run through the list. Allium, so good to see you here. Kevin, nice to have you. Jamie, thanks so much for tuning in again. That's TradeSpotting for people who don't know. Matthew Rodriguez, great to have you. Simao Obrigado. Matthew Rodriguez again. Oops, you get 2 shout outs. There you go. Nice to have you. Navin Ethan, thanks so much for joining us. K-Doc, it has been a pleasure as ever. Jake at the Vantage Point, thank you so much for tuning in. It's really good to have had you here this evening. Zoner, you are great for tuning in. Thanks so much for that as well. Lovely to see you as well. Tony Quaz, who was chatting earlier on. I wonder what's going on with XRP, he said, for instance. Well, we did kind of talk about it. It's kind of rolled over a little bit at the minute. Do wonder myself in terms of behind the scenes, perhaps their whole buying back the coin, inflating its own price and initiating its own pump in advance of the airdrop was a good idea. Okay, and who else did we have here? Elrond EGLD, Steve, thanks for tuning in, Steve. Okay, cool. If I missed you, such as Drew's Tech or anybody else that didn't get a shout out, thanks so much, Drew's Tech, for tuning in. And you said liked as well. I'm really bad at responding to those. I'll have to get better. Right, cool. Catch you next time. Thanks so much, and I'll see you tomorrow, hopefully about 7 or 8 or so. Thanks so much. See you then.